stocks hovering back above neutral. We've got some green with less than 10 minutes left in the day. Joining us, Derek Izuel, as the Chief Investment Officer at Shelton Capital Management. Derek, it looks like your view is that we have seen the peak for inflation. If that's the case, what do we do about it as investors?
Well, we've seen the peak at inflation, but what the market, I believe, is pricing in is that not only we've seen the peak, and that's fair to say, with housing rolling really weak, and that's going to start reflect itself in CPI data. You know, all the break-even rates are just above 2%. So the market thinks we're going back to 2% in fairly short order. What we believe is going on, though, is actually it's going to settle at a somewhat higher level. Something closer to 3, 4, maybe even 5%. There's so many longer-term forces that created the low inflation for decades, globalization and such, that are reversing now. And without those in place, it's hard to envision the resumption of these 2% or lower interest rates, or inflation rates that we've seen for such a long time.
If we get stuck at 4 or 5%, what kind of Fed policy does that command, in your opinion? Well,
it completely changes the tone of the Fed, because when we were in this deflationary or disinflationary environment, the Fed didn't have to worry about inflation. It really didn't, and so it was more worried about deflation, that if the economy started to soften and roll over and slow down, they would cut rates really rapidly to make sure that it picked back up and we didn't get into a deflationary environment, which is also harmful to markets and the economy. Now it's going back to that inflationary focus that we saw decades ago, 70s, 80s, even into the 90s. And that's a very different market than what we've been used to for the last 15 to 20 years.
Now, if that's going to be the case, what does that mean for where we put our money? I mean, do we, because last year it was just short bonds, but if inflation's peaked, does that mean that treasuries will sell off as hard? If inflation sticks around, it turns into like stagflation, the economy buckles, and it really stinks, then maybe bond yields go down because people need something to get a yield from. How do we put that view to work, Derek?
Right. A lot of different ways. I mean, from a bigger perspective, that, first of all, stocks and bonds might not be the great diversifiers they've been for a long time, because they're going to start moving more together than they move opposite. And so the 60-40 portfolio is not going to be as effective as it has been for the last 10 or 15 years. Second of all, within equities, so the dominance, if this is true and inflation stays where it is, the dominance of the big growth stocks is probably over. And they've given up a bunch in 2022. They would likely give up even more relative to the rest of the market in 2023. So that means we're looking at things like value stocks, materials, commodity-like stocks, overseas, international stocks, emerging markets, and smaller caps as well. All these areas of the markets have underperformed for some time here. They're starting to see resurgence. You can continue to see that resurgence going forward.
All right. Well said, and looking forward to following up on this conversation throughout this year. Derek, thanks a lot for coming back to us.
You bet, anytime. Thanks a lot.
Sure thing. Derek Izuel, Chief Investment Officer at Shelton Capital Management. All right, bell's coming up. We'll see you in just under 3 minutes.